Buying call options is an okay strategy if you use it at the right times, like earnings. However, if you want to get a discount on your favorite stocks and get paid to buy those stocks while collecting juicy premium and just racking up profits in your portfolio, nothing beats selling put options. Hey guys, Corey here. Welcome to the channel. If it's your first time stopping in, be sure to subscribe, tap the bell so you know when I post new videos, and give me a thumbs up as it greatly helps the channel grow. Don't forget you can sign up for the newsletter right there on the screen in the information box below. This way you can get tips, strategies, and updated news right to your email box. And for the first 100 people that sign up right now on this video, you are going to get free trade alerts. I just want to point out that a lot of people have been having trouble with the newsletter and getting responses or confirmations from it to their email box. Check your spam folder. If it's not there, something's going on. Technically on my end, we're working on it, but a lot of people have said that it's in their spam folder. You haven't missed any alerts as I've been posting those alerts on the YouTube community section, and they're going to be going out in the emails this coming week. Also, do not forget, I have my training course and full Discord launching next week. Very limited slots available. I really only have a few slots left. They're filling up rapidly. I can't teach 20,000 people at one time, so I can only select a certain amount of people. If you guys want to learn all my strategies, have my coaching, one-on-one, tailor, custom-made strategies just for you so you can achieve financial freedom. So you have to act now. Email me, Corey@investwithcorey.com. I just want to point out that I'm not a financial advisor and this is not financial advice. I'm just here to teach you tips, strategies, technical fundamentals, financials, and help you out to become profitable in the market. However, it's ultimately up to you to decide which stocks you want to buy, and ultimately it's up to you how much of a position that you want to hold financially in that stock or asset, as it's your money. When you're selling put options, you want to find stocks that are close to a floor or close to a support or a demand zone. This way you get a better chance of making profits on the puts multiple weeks in a row before getting assigned. And maybe you won't get assigned. You can roll your put option out and up to collect more juicy premium before entering a stock. You're never going to time the bottom perfectly. That's impossible. However, I'm going to show you guys on a firm right now. It's kind of at the bottom. It really is. I'll give you guys an example right here. You will see that a firm was last in this position in November of 23 when it broke out and jumped above $26. I believe the $29 is a pretty big floor in support for a firm. I mean, it could go below that, but it's unlikely right now. I mean, with the market the way it is, anything's possible, really, truly. So what we're going to do is we are going to sell a $29 or $28 put option. I wouldn't mind getting into a firm at $29 or $28. Both very good prices. We can see if we go into the 15 minutes that there's a crossover getting to happen and a bullish divergence. There's going to be a crossover, and this is going to happen. It's going to come down a little bit here and then come back up. This crossover is going to happen somewhere on Friday, like tomorrow. Today, when you see the video, it'll probably have already happened, but it's going to happen. It could come down a little more like this and then come back up, but there's a bullish divergence right there and right here, but yet the price is leveling off. And if you look very closely, you'll see that this 10-day moving average is getting ready to cross over the 20-day moving average with bullish divergence right here, and everything is in the middle. A direction is about to change. So what I would do is I would sell $29 or $28 put options. Let me show you how this works. Okay, so I'm going to go in here to show you how to sell a put option. So we're going to go with a $28 option because it's a 23 delta, almost an 80% chance of success on this. We're going to click on sell, click on continue. You might be able to get 37 because that's actually the bid. So you might be able to get 37's the better chance. $37 juicy premium, and you will be able to do this multiple weeks in a row, most likely, because a firm hasn't been $28 in a long time. And if you get assigned, it's well worth it. Even if a firm goes to $25 or $26, you're going to be in the hole less than 200. You'll just turn around and sell covered calls. If you want to collect more juicy premium, you could sell the $29 put option and you could get about $68 for this. I would probably sell the $29 put if you want to get assigned this week or next week. It's still not that high of a probability. It's still a 70% chance of success. So you can get away with it because it's aggressive. So let's say you do that for 2 weeks and you don't get assigned. You can always roll out and roll up, and you can go up to a $30 $30 put. A $30 put could get you assigned. It's more likely, a lot more likely than the 29 or 28, but you collect $117. So if you want to just get into a firm now and you're feeling bullish, which I am, this is my bullish strategy. $28 would be the ultra safe. You're trying to get it as cheap as you can, but you could miss it. 29 is a fair balance between the two. However, I believe a firm is not going to go much below 30. If it does, it might go to 29 or 29.50 where it's already been. If you're collecting $117 and you get assigned at 30 and the price is 29, you're still $17 in the positive. So we click on this. We're going to go out 1 week, collect $117 juicy premium. Now, if you get assigned, let me show you what happens. You're then going to go ahead and sell a covered call. And if you get assigned at 30, then you're going to want to sell a $32 covered call. Look at $32. It's $32 a week. If you go with a $31 call, it's $50 a week. So if you sell puts and you get in at 30 and the price goes to 29, sell a $31 call, collect $51 or $53. And if you get assigned, you're making $100 profit on the stock plus the juicy premium. It's basically the wheel strategy, but you can sell puts week in and week out to collect juicy premium. So let's say you sell the Affirm put for $117 for 2 weeks in a row. So let's look at this here. Affirm, and you sell the $30 put and you are making $117 and you do this 2 weeks in a row. This is going to be $234 juicy premium. And let's say Affirm drops to $29. Well, your average cost is $30 minus $234. Therefore, your average cost is $27.66 per share. So your average cost is $2,766. So $2,766 is your average cost. So you're already in the positive, $134. So you're $134 in the positive already. You sell covered calls at $31. Let's say you get assigned your first week because you wanted to collect $53 juicy premium. You sell a $31 call option and you collect $53 juicy premium. That's a crazy looking five. $53 juicy premium. It's all yours. Okay. Then you get assigned at $31. So what we're going to do is we're going to calculate what you've made. 3,100 minus $3,000 that you paid is $100 plus the $53 juicy premium plus the $234 from the puts. You have profited, okay, $387 profit. And you've done this in 3 weeks and you've done it on $3,000 capital. So you have netted a 12% return in 3 weeks. That is insane. The stock market returns 16%, roughly 12 to 16% per year. A lot of times it's less. Even if it was 50%, you're making 10 to 12% in 3 weeks. So that would be more in line with 15% a month. That's a very big return. And you can continue to do this. And you don't have to get assigned on your $31 call. You could just roll that out and up to $32 or $33 and keep collecting juicy premium and then get out at $35. And you could turn this $387 into $1,000 in 2 or 3 months, maybe less. But again, that would still be 30% in 3 months. So you're averaging around 8 to 12% per month. This is an incredible growth. To be able to generate 8 to 12% per month, it's insane. 8 to 12% is really good. For a smaller portfolio, 8 to 12% is very consistent and it can be very reliable if you implement the correct strategies like I do, selling puts to get in and then selling covered calls to get out. It's the wheel strategy, but selling cash secured puts is the safest strategy that you can implement into your portfolio. You can also implement the covered calls because that is also just as safe. However, the cash secured puts gets you a discount on your favorite stock. So you're not getting out, you're getting to collect juicy premium and to get paid to enter your favorite stocks. That's why my favorite strategy is selling cash secured puts. Puts is the ultimate cheat code to success in the market. Finding the right stock, finding it at a right time. This way you're timing the floor as best as you can and then selling those cash secured puts at a juicy premium over and over again. And if you don't get assigned, you roll out, up and collect more juicy juicy premium. You just rack up this premium all over the place just to get a discount on your favorite stock. As long as you follow the rules by selling put options only on stocks that are of high quality, stocks that you want to buy anyway, and stocks that are hitting a support or a demand zone at the bottom and you're trying to time the floor. If you follow those 3 rules, then there's no real downside to getting assigned even on your first week because you already want to buy the stock anyway. It's the ultimate cheat code to dollars. The ultimate cheat code to getting in your favorite stock so that you can just go ahead and start selling covered calls to make more profit off your favorite stock. And then once you get assigned and you make a profit selling the stock, you start selling cash secured puts to get in all over again. I'm just going to give you guys a quick example of how much money that you can really truly generate by selling cash secured puts. Let's go over to Robinhood and take a quick look. Let me show you. Let's say hypothetically you have a $10,000 portfolio. You could sell 2 cash secured puts on Affirm, and then you could sell maybe 1 or 2 cash secured puts on Lyft or Palantir. So let's just go ahead hypothetically, just for general purpose here, and say that you're going to go ahead and sell 3 cash secured puts or maybe even 4 on Affirm, and we're going to sell the $30. Okay. Click on sell, click on put for next week. We could even go 14 days out, but we'll just do 7 days for now. And let's just say we're going to sell 4 cash secured puts. This is going to be $11,000 portfolio size required. So that's what it's going to require in order for you guys to do this is $11,500. But let's say you have $11,000 or $12,000 in your portfolio. You can generate $468 a week. And that's at $1.17. We could actually get $1.20 for it because that's the middle. We could safely and quickly get $1.19 or $1.20. So let's do that right now. So right here, you can see that an $11,500 portfolio. So if you have anywhere near that right now, then you could generate $480 a month on average. Some stocks have less premium than Affirm. Some have more. This is a little on the higher end, but realistically on $11,000, you can make about $400 to $500 a week. This is a lot of premium. And you could do this week in and week out because unlike other strategies like buying options, which are mostly terrible, you're just throwing your money away because if you spend $11,000 buying calls, that would make me very nervous. Even with my portfolio being in 7 figures, just throwing 11 grand away would make me a little nervous. And when you buy calls, that's what's happening. So if you did that, you're kind of just throwing money away because if the stock price doesn't go in your direction, it stays the same or goes down, then you've thrown all the money away. And even if you sell it off quickly to recoup some of your losses, you could lose 20, 30, maybe even 50% or more. When you sell puts like this, you really can't lose. And the reason I say you can't lose is because what's the worst that happens? You get assigned, but you already wanted the stock anyway. And now you've got a massive discount to get in. As long as you follow the rules, which are only sell puts on stocks you want. That's the most important rule. Even if it's not the highest quality of a stock, when you get assigned, you're still getting assigned on a stock you want. So it makes it a good thing. Rule number 2, though, is only sell puts on quality, profitable companies or quality stocks that are likely to become profitable, that are trading at a good and fair value, that are not overpriced. So if you follow those 2 rules, you can't lose. The option buyer of puts and calls loses all his money or a big chunk of it, whereas you don't have to worry because if the stock price goes above your put, then you don't get assigned, your collateral's released, and you keep the juicy $480 premium. Good to go. Well, what happens if the stock price falls below your put? Doesn't matter. You get assigned. Now you own the stock at a discount. You win either way. You can sell these puts to open, set it and forget it. Walk away and enjoy your week. You don't have to worry about anything because it doesn't matter what happens, you win both ways. Even if the stock goes down to $28, at that point, you're out $2 minus the $120. So you're only out $80. You see what I'm saying? You're only out $80 per 100 shares. At 4 contracts, you'd be out $400, but you turn around and sell $50 calls and you'd make it all back in a week or 2. There's no real downside to it except one thing, and that is a stock just plummeting. If Affirm was to go to $20, that would suck because then we'd be in the hole $800. We'd have to sell massive amounts of calls over the next 6 months to a year or wait for it to recover whenever that may be. But the reason why that's unlikely or highly unlikely is because you only sell puts on stocks you want and that are of high quality. You time it when the stocks are near a floor or near a demand zone or a support zone. This way, if it goes down and you get assigned, it doesn't go down a lot. It goes down $1 or 2 or maybe 3, but nothing crazy, which is why I'm setting up this Affirm put or short put. This is the reason why I'm using Affirm as an example levels because it's pretty close to a support or a demand zone, and it's unlikely to go much below 29 or 28. Even if it goes further than that, 24 to 25 is like a solid floor. So we're playing a little risky here, but not too risky because it's a stock that I love, and Affirm has got some very juicy premium. I've made over $500 on covered calls. I actually think it was 7 weeks, but Affirm is amazing for juicy premium. But this is just one example of how you can take an $11,000 account, just as an example, and make $400 to $500 a week. That's $2,000 a month. Even if this was only $300 or $400, that's still $1,200 to $1,600 a month, juicy premium on $10,000. If we were to do this at the $29, which is even safer, and we were to sell this at 68, which is where we would get filled, and we were to sell 4 of these, you'd only need $11,300, so $200 less. So you could collect $272 juicy premium every week. This is pretty close to $1,100 or $1,200 a month on 11,000. So again, this would be pretty close and in line with 10% per month, which is insane. I sold 12 contracts of Affirm 2 weeks ago and collected 65 for those and made over $780 in 1 week. I didn't get assigned. Not that I cared. I had to put up $34,000, but I made a quick $780. It was like nothing, like clockwork. Very good premium. Like you can't beat Affirm for their premiums. And cash secured puts is the safest strategy. If you guys want to make safe, consistent, juicy premium and profits in the market, selling cash secured puts is the way to do that. It is the safest way as long as you follow these 3 simple rules. Only sell puts on stocks you want and ones that are of high quality and they're near a floor or a support or demand zone at the bottom so you can time your entry. If you follow these 3 simple rules and sell cash secured puts, there's no downside. It's like collecting free money and getting paid to enter your favorite stocks. Thanks so much for being here, guys. I really appreciate you. Be sure to subscribe and tap the bell so you know when I post new videos. You can also give me a thumbs up at any time as it greatly helps the channel grow. Don't forget to sign up for my newsletter right there on the screen and in the information box below, as you will get tips, strategies, and updated news delivered right to your mailbox. And the first 100 people to sign up gets my free trade alerts. High five. We've been making lots of money over the last couple of weeks. All my subscribers that follow my trade alerts are making juicy premium on my trades, and that could be you too. Don't forget my very limited course and Discord and one-on-one coaching starts next week. I have very limited slots available, so be sure to email me, Corey at investwithcorey.com. This way you can reserve your spot. I only have a very select few slots left as I can't coach 20,000 people one-on-one. Although I wish I could, I just can't. So you have to email me and reserve your spot if you really want the coaching, the Discord, and the full course to make you a much better trader, as I have so much I want to teach you. Thanks so much for being here, guys. Don't be sad. This video's over, but I've picked another video just for you guys. How you can grow your portfolio from 5,000 to 100,000. And that video is right there. I'll see you over there, guys. You're going to enjoy it, and you're going to learn a lot on how you can grow your portfolio with another one of my favorite strategies. Click in that link right now, and I'll see you over there. Let's grow our wealth together. Take care, guys.